Hello and welcome to the trade setup. In this video we are looking at silver. It is time for another update, and on this chart, since the previous video when we already had this stronger descent to the downside, we have been preferring the idea of a diagonal structure to unfold in this movement to the upside. So we would have a wave 1 in place, we would have a wave 2 in place, and we would be within the larger wave 3 to the upside, in which of course we are looking for an ABC pattern to unfold since we are tracking a diagonal structure. Now, the thing is, we would be able to consider a wave 3 top already within this structure, but I am inclined to prefer a little bit the idea of an extension of this wave 3. I would slightly prefer this expectation, although I want to make it absolutely clear that it is not necessary. Now, regardless of that, this wave C to the upside would still be expected to push to higher prices, even if we don't manage to hold the current levels of support and extend within this wave 3 to the upside. I would still expect to form another high before having a more substantial top within the even larger wave 3 to the upside. Now, in this structure, in this wave C, we have been tracking the idea of an ending diagonal that would be taking place, yeah? We have here a wave 1 up, a wave 2 down. This would be our wave 3 to the upside, and we would have our wave 4 correction already in place within this interpretation, as we have even wicked below the last level of support at the 61.8% retracement. But since this wasn't a sustained break, we are able to still reliably track a fifth wave that could form within this interpretation. Now, within this wave 4, we even have a very clear 3-wave correction that has taken place. Yeah, a 3-wave pattern, and there isn't even any indication that this wave to the downside would be able to extend to even lower prices itself. It seems quite apparent that a bottom would be in place, whether it is the entire wave 4, whether it is just a wave A to the downside, and the correction would still be unfolding with a follow-up wave B and a wave C to even lower prices. Now, in terms of resistance, we could be looking here at the levels between the 38.2% retracement, so we are talking about the $81, $82 level, all the way up to the $106 level. Now, I wouldn't expect this to be the most significant area of resistance that strongly suggests we should be looking for continuation to lower prices, but it's just an idea of where would be our sign, our signal that a more substantial breakout is going to occur. Now, we will not keep this on the chart just because I want to have more visibility. And in the previous video, we have identified from the current wave 4 lows an initial 5-wave move to the upside, which we have been tracking within a wave 1. We provided a wave 2 area of support at the levels between the $77 all the way down to the $68, and not much has happened since the previous video. Yeah, we have just gotten a tiny extension to even lower prices, and this was actually a highly interesting accumulation area potential because it was after an initial 5-wave move to the upside. It was at extremely deep levels of support from a larger time frame perspective, yeah. It was very much between the 50 and the 61.8% retracement in the last region of support within this correction, and we were looking with high probabilities for continuation to higher prices, and we knew that below the 78.6% retracement here, it was going to be a strong sign that this structure would fail, that we would get another extension to lower prices. So we had a great area of support for a quality structure. We had clear levels of invalidation. Yeah, we knew the 78.6% retracement was going to be the most important. We would absolutely need it to not break. And all of this was providing us a risk management plan. Now, if you want to get access to our monthly top picks, you can sign up to our newsletter. The link is in the description and it is completely free. We will identify for you those high quality structures, and in the videos you can follow them along with us. We will provide clear levels of support with clear levels where the probabilities strongly shift to a much more bearish interpretation, and it will basically generate for you a risk management plan that you just need to apply on your own terms. Now, once again, this is completely free and it doesn't require any special info, just your email address, so we are able to send the list to you. Now, If you enjoy our content and you want to support us anyway, you can check out our channel membership. The link for that is in the description as well, or you can click the join button and you will even get access to additional content. And with that said, let's go back to the chart. Let's continue. So within this structure, we have been looking ideally for a 5-wave pattern to occur. But mind the fact that this is within a larger ending diagonal within this wave C, and we are looking for an ABC pattern to occur within this wave 5, so we do not need to build the entire 5-wave structure, but this would have been ideal, because if we managed to build here a larger initial 5-wave move to the upside, we would have had yet another high probability structure for an ABC movement that would complete the wave 5 to the upside. Now, not getting this wouldn't mean that we can't still track support and continuation to higher prices, it's just that it will not provide us such a high probability scenario. Now, within this structure, we are looking once again for an ABC structure to unfold within this wave 5. And the thing with a wave A is that it can be indeed a 5-wave pattern, but it doesn't need to. So we could be building instead an ABC structure within the wave A. And in that case, yeah, we would only have a 3-wave pattern to the upside, no strong suggestion of continuation. It might just be part of the orange correction I have just outlined. Yeah, we have outlined this area of resistance for a larger ABC movement. Now, we would still like to see a wave 3 unfold within this area. However, I would need it to fulfill some expectations to be able to be considered a reliable wave 3. And firstly, I would need it to reach the ideal target, the 138.2% extension of the wave 1, that is around the $108.5 level. Quite extended, yeah? Even above our area of resistance that ended at around the $106. Now, if we get a week into this area, could even still be part of the wave B correction in an ABC structure, not really a problem. But the actual issue is that within this movement to the upside, we have so far only gotten to the 78.6% extension. That is nowhere near enough, and it seems we already have 3 waves within this area in place at the very least. I could even consider this pattern to be full within a wave C in a 1, 2, 3, 4, and 5, so keep that in mind. We might have a top in place at this point, but I would not be able to reliably track this idea of a wave 3 within this structure anymore. And as I was planning to record this video, we would have still been able to even extend directly within a 5th wave in this area, part of this wave 3, still to higher prices. Now, with the latest push we got in this candle, this has become an incredibly low probability expectation, and I would probably even assume that a wave 3 top would be in place at this point at the very least, if not something even more substantial, and we would still have the ability to continue within another high, but it would really only be expected to take us, this 5th wave, to the 100% extension of the initial push to the upside, yeah, the $96.8 area could come to mind, and that is the ideal target for a wave C instead. So it seems rather preferred, it seems rather likely that this structure is going to build an ABC pattern instead. Not necessarily a problem, once again, could very easily be the wave A itself that has built this pattern, but it will not provide us the highest probability structure for continuation to higher prices afterwards. Since we are so far from the ideal target for a wave 3, our focus is going to be the idea of an internal A, B, C structure within this wave A. And within this wave C, I'm looking for a 5-wave move still. Again, could be in place. I'm not assuming that we aren't able to have topped already, but I would still have an area of support available at this point that I would like to track for a potential wave 4 that would allow us to look still for a wave 5 to take us to even higher prices within this wave C before looking for a more substantial top and a more clearly full count. So I'm watching for this, the levels between the $87.7 all the way down to the $83.9, basically the $84 level. And the ideal target for this wave 4 would be the 38.2% retracement, where we even have some additional structural support within this area. Now, the ideal target for an internal wave C within this area would be the 100% extension of the wave A that sits at the $86.3 level that has just been achieved, and based on the internal structure I can track here, I would actually still like to see a fourth and a fifth before I would consider a more clearly full count within the wave C. That would very much take us in line with the 38.2% retracement, from which point I would like to see another high, but once again, this is no guarantee, it's just an idea, and the main purpose of this area of support is to signal to us that a failure would take place, because we know that below the 50% retracement, this structure is very likely to have already formed a top within this wave C in yellow, and that we would need to consider this wave A would have a top in place, and that we would need to be looking for a wave B correction to take place within this area. Now, as I mentioned, we can track an area of support for such an expectation, even though it is not the highest probability structure, and we would be watching the levels between the $79.7 all the way down to the $69 level. Yeah, we got basically perfect confluence with the largest 61.8% retracement for the wave 4, and it is not uncommon at all for previous levels of support to help in creating subsequent lows in an uptrend, meaning that as we push into the 78.6% retracement, if we get to that level, it's not a necessity even within this wave B, we would likely see help from the 61.8% retracement in forming this bottom. Now, if we are to form a wave B within this area, I would definitely expect it to be more substantial than just a quick push here into the 38.2% retracement, and if we push to higher prices from these levels, from such an idea of a structure, I might even consider internal extensions where this could technically work out as a 1-2 setup, but for me it is not going to be a high probability interpretation, and below the 50% retracement is a strong signal to me that we would likely go at least to the $79.7, and the odds are even lower than that. But for now, there isn't much else to add. These are the levels, this is the trade setup. I hope you enjoyed the video, and if you did, don't forget to leave a like and subscribe, and if you enjoy our content, you can check out our channel membership. The link for that is in the description, or you can click the join button and you will even get access to additional content. Other than that, let me know what else you would like me to cover, and I'll do my best to do that in the days and weeks ahead, and until then, I hope you have a nice day, and I hope to see you in the next video. Bye bye.